It's always nice to have somebody looking out for a person. There are people that probably are looking out for me, but what happened overnight was somebody's looking out for CERN. One of his biggest fans sends me a note this morning and says, "How come you never mentioned that CERN has a profession? That he doesn't just do X and YouTube all day long and make fancy charts and things." And so CERN, you're in some kind of business where you do some kind of stock analysis, kind of the stuff that you show us every week, right?
Yeah, it's a wealth management, investment management business, Randy.
Okay, all right. Well,
Yeah,
of course, I knew that, and we do mention it from time to time,
you have.
but maybe we should mention it more. I don't know. But
Yeah, I founded a company called Brilliant Advice. Having some fun with the name.
yes.
Not suggesting that I'm particularly brilliant, but light, right? We're shining a light on
The
things.
light, yes.
Brilliant, yes, brilliance.
Good,
But yeah, we help people with their investments and their financial lives.
good. Very cool. Very cool. Well, there you go. I've done my duty for your fan. I'm
My one fan.
surprised. Okay. Well,
Good to have one fan, Randy.
so this morning we were just talking about it. My head is going to blow up because there's so much news. I'm just spinning from one news story to the next. We got all the political news out today with Brett Weinstein saying that Trump is going to be the savior of the United States. And Brett Weinstein says this. For those of you who don't know, he's a super, super liberal, lifetime Democrat. And he just went on Joe Rogan and said, yeah, Trump will bring us back to a real American, the way the forefathers intended. That's paraphrasing. And then we've got all this news over on Tesla's side with the stock going crazy. And I mean, holy mackerel! It's only 9 o'clock in the morning. It's 90 degrees out already. Going to go to 112. I think I'm going to need a nap.
Yeah. Well, let's do something that we never do on this show.
Okay.
Right? We always talk about Tesla, the company.
Right.
And anytime you ask me about the stock, I politely decline my thoughts about the stock. Today, I'm going to do a complete 180 on you. We're going to talk about Tesla stock.
Oh, good.
Okay, because we don't talk about Tesla stock enough.
Well, it seems like a good week for it.
Sure, let's only talk about the stock when it's up.
All right.
It's less painful that way. But I'd like to share with you some work that I've done on Tesla stock and trying to understand it a little bit more deeply.
That's the prettiest chart you've ever put up ever.
This is a kind of a cool looking chart, and let me share with you what you're looking at here.
Okay.
So since Tesla's IPO, which was on June 29th, 2010,
Yes. Yeah.
to the end of August,
Yes.
there were 5,368 trading days
Okay.
in the stock.
Yes.
And this is a graph of every single one of them. What do you notice on this chart, Randy?
It's beautiful. It's symmetric. It is. It's got lots of pretty lines on it of different colors. I have no idea what you're trying to show me here.
Well,
Oh.
yeah, I think you've picked out some key things. It looks pretty symmetric. I will say that there are slightly more up days than down days.
Okay. Okay.
I believe, if I remember correctly, about 52% of the days are positive
Ah,
and 48% of the days were negative.
I see.
Okay. And there's a lot of days on here where the stock's not doing a whole lot,
Right. Right.
but there's quite a bit of activity at either end of this chart, positive and negative.
Okay. So let me see here. So I think I'm getting it. So that you're showing us that there was a day when the stock went up 20, at least one day, 20% in one day.
Almost 25, actually. We'll get to those details in a minute, but
I
yeah,
see.
this is just a general picture.
I see.
I've removed the actual dates, right? Because I've sorted these by highest return down to lowest.
Okay.
So the x-axis is not a calendar. It's just one of these 3,568 days.
Yeah. Okay.
Yep. All right. So here's a bit more of a summary of that chart.
Okay.
So at the top, there were 49 trading days where the stock returned 10% or better.
All right.
Okay, over these 3,500 plus days.
Yeah.
Another 34 days where the stock was between 8 and 10%. 86 days where it returned between 6 and 8%, et cetera, right? So there were definitely a bunch of days where the stock had some really strong single one-day performance.
Right.
Okay. Move on down the chart here, and you can see that between 0 and 2%, there were over 1,000 days where the stock moved between 0 and 2% up. And
Right.
there were almost 1,000 days, 916 days, where the stock moved between 0 and minus 2%.
Right.
So one of the conclusions is that the stock spends a lot of time just marking time,
Of course. Yes.
right? It's just fluctuation, it's noise, whatever you want to call it. It's just moving up and down for whatever reason.
Mhm.
Now, folks like you and I and others like to talk about reasons why the stock did X, Y, or Z.
Right.
And that's great. A lot of time is spent on that. And I've always contended that people tend to miss the forest for the trees when you're focused on daily stock returns.
Right.
Right. And I'll share with you in a minute sort of what I'm talking about. But you can see that there's also quite a large number of negative days. At the bottom end, there were 28 days where the stock lost 10% or more.
Mm-hmm.
Now, the good news is that's less than the number of days where it was up 10% or more. But still, there were 28 days where people were not enjoying being a Tesla shareholder.
Yeah. And sometimes they talk loudly about it on X.
That's right. Right. And again, these are our single day returns. You obviously string all these days together and you get a longer term return.
Right.
So when you do that, here's how it looks. And did you know, Randy, that since the IPO, Tesla stock has had an average annual return of about 41% per year for 14.2 years?
So buy and hold from day one, you'd really do well.
You would have done very well. And I measured this from the IPO date,
Yes.
assuming that you bought the shares in the market on the IPO date,
Okay.
not the IPO shares.
Right.
If you did that, your return actually would be quite a bit higher. I think it would
Yeah.
be close to 45 or 46% per year, because the IPO, the stock was up 40% on the first day.
Mm-hmm.
But I'm taking that out of this analysis because most people don't get an IPO allocation. They don't get those shares.
Right.
The only way to buy Tesla would be to buy it in the open market.
Mm-hmm.
That's what I assumed for this analysis. Okay. And you can see here that, the stock has not moved up in a straight line. The 41% here is graphed as a straight line return, but the blue line is the actual stock price and how it moved up and down during this time period. Now, what I've done on the left-hand side is graph this as a log scale. And just as a reminder, a log scale shows an equal distance change is an equal percentage change.
Mm-hmm.
Otherwise, you get the hockey stick chart if you don't
Sure.
use a log scale over a long period of time.
Sure.
So you can see that there are some stair steps in Tesla's return over time, and we'll dig into this a bit more in a minute. But all the returns, or a good portion of the returns, come very quickly in the stock, and typically over a very short period of time.
Mm-hmm. Yeah. Yeah. We've seen
All right.
that. Yeah. Anybody who's been in the stock for a while remembers those days.
Painfully remembers,
Yeah.
or joyfully remembers
Joyfully
those days, but yeah, painfully since then. All right, let's compare it to Nvidia, another favorite stock of the day.
Mm-hmm.
And Nvidia's distribution of stock returns looks pretty similar.
Wow.
And I'm using the same time period. This is since Tesla's IPO.
Yeah.
So it's the same 3,568 days.
I see.
Now, you'll see that Nvidia actually has had a better one-day return than Tesla did. And I think its worst day is a little bit less. We'll get to those numbers in a minute. But the distribution looks very similar.
Yeah. Yeah.
Okay. And if you invested in Nvidia on the day that Tesla came public, you would have enjoyed 61.5% per year for those 14.2 years.
Wow.
Right? So not too bad. Now, look at this, though. Most of the time, the stock price was under the line.
Yeah.
A lot of the strong performance has come, in recent year or so.
Yeah.
Right. So the average annual return measured to one of these points would have been a lot lower than the 61.5%.
Right.
Okay.
Which is why statisticians get away with so much nonsense.
That's right.
Picking the day you start and the day you end
Can make a huge difference. That's right.
Is the magic.
Yeah. Now, again, just for comparison, I compared this to the S&P 500.
Oh,
And using the same scale here, you can see that already that the S&P the returns are a lot more muted than Tesla or Nvidia's stocks are. Kind of makes sense, right? Because the S&P is a composite of 500 companies. And if Tesla or Nvidia have a good or bad day, chances are there's other companies that are offsetting that to some degree.
right. Get it.
Okay. So here's a summary of all three. Tesla's in red, Nvidia in green, and the S&P in orange. And you can see that Tesla and Nvidia have more action at the tails at either end. And the S&P has more days in the middle where it's just kind of marking time. This is why patience as an investor is a key trait.
Yeah.
Most of the time, stocks do absolutely nothing. And for those that don't like pictures, here's the data. Using those categories, you can see that Nvidia had 19 days where its stock had a 10% return or better. The S&P over this time period had none. Now, this is just since Tesla's IPO. If we would have gone back a little further to the financial crisis, the S&P would have had some more volatility than it's showing over this time period. So to your point, the time scale matters, but I'm consistent, at least I'm using just since Tesla's IPO to look at this data.
And unsurprisingly, Tesla is more volatile than Nvidia. You can see right away in the numbers.
Yeah.
More days of up 20, more days of up 10, more days of up 8.
Over this time period. Now, if we would have looked at Nvidia's entire history, it might look a little different.
Oh, okay.
Right. Nvidia's been around a little longer than Tesla has. So we're not comparing apples to apples here necessarily.
You're not
just sort of showing two.
You don't even have Apple on the chart.
Right. Yes. It's a big part of the S&P 500, Randy. So you can consider it there.
Okay.
But yeah. And you can see that the number of positive days for Tesla, about 53%. And Nvidia, it's about 54. And for the S&P, it's a higher percentage, almost 59% of the days positive.
Wow.
Okay. So anyway, so I thought that was interesting.
Definitely.
Now, let's take a look at the top 100 best days for Tesla. The top day was on May 9th, 2013. The stock went up 24.4%. Do you know what happened on that day?
This is pre Randy's involvement, and I know I'm supposed to be the historian too, but I don't.
Yeah, so I took a look at this, and Tesla had announced the evening before their earnings.
Okay, and they made money.
And they had record sales of $562 million. Okay, by comparison, they're doing about 25 billion a quarter now.
Right.
And they had their first ever quarterly profit.
Ah.
And the stock jumped 24.4%. The next day it went up. That's also one of the bars on this chart. And the third day it went up. It's also one of the bars on this chart. And over those 3 days, the stock rose 57%.
Wow.
Okay. On its first quarterly profit. I guess that took people by surprise. Okay. Now, Nvidia has had a day where it was up 30%. And I don't actually know the circumstances on this, although I'm sure it's probably pretty similar. This is going back to November 2016.
2016 when did they announce that they had the parallel compute capability?
Not this far back, I don't believe. I don't know for sure. I should be more prepared to know exactly what caused this, but this would definitely be around one of their quarterly earnings reports.
Okay. Yeah. Okay.
So something to do with their earnings announcement or forward-looking guidance back in 2016. And then what we can do is compare the best 100 days for Tesla to the same days for Nvidia. Oh. And you can see that they share many days where both stocks are strongly up. But there's also many days where Tesla is having a top 100 day and Nvidia stock's down.
Right.
Okay. If I remember correctly, I think there's something like 28 days here that they share where they both have top 100 days for both companies. So a lot of the time, what's moving Tesla stock is independent of what's moving Nvidia, basically.
Mhm.
Okay. And then I compared it to the S&P 500, and is even less of a relationship here. Okay, so what's driving the stock on those big days is typically Tesla-related news, right? To the news related to the company, not just the financial markets.
Right.
Okay, there's a couple of exceptions to that. You can see on the right side, there's a couple of days where the S&P and Tesla is up a similar amount. So that'll happen from time to time. All right, that's the good news. Let's look at the bad news. The worst day for Tesla was September 8th, 2020. Stock fell 21%. Do you remember what happened on that day?
September 8th, 2020.
I'll give you a hint.
Something to no. This is 2 months before the election.
Nothing to do with that.
Yeah, you'll give me a hint, okay?
There's an organization called S&P.
Oh, the S&P did not include them.
They announced that they did not, well, they didn't announce, but they did not include Tesla in its index, the S&P 500. It was not included in an update. They didn't say we're not including Tesla. They just included in the update.
Right.
And the stock dropped 21% that day.
Because everybody was expecting it to happen.
Yeah. Do you know how many days it took for the stock to recover?
No idea.
4.
Recovered the entire thing in 4 days.
Yeah. And 2 months later, on November 18th, the S&P announced they were adding Tesla to the S&P index. And the stock rose 10% on that day. Right? Complete shenanigans as far as I'm concerned. But people cared about that. All right. Nvidia, its worst day, November 16, 2018. Stock drops 18.8%. Well, I'll save you the pain. It was around earnings time. And they missed analyst expectations, and their revenue guidance for the next quarter was lower than analysts. Okay.
Yep.
And people sold the next day, the following day after this 18% drop, it dropped another 12%. Okay. So the market was saying, Jensen, you know, we don't like this. We're not happy. Take this. We're going to punish you. It took almost a year for Nvidia stock to recover. Do you know how much the stock has gone up since then?
Since the 2 days that it went.
After it went down.
After it went all the way down and hit.
Sorry, after the recovery, after it recovered back to where it was prior to this drop.
Okay. And how much has it gone up since then?
Yes.
5x?
24x.
24x.
So all this mumbo jumbo about meeting or beating expectations, who cares? You're missing the forest for the trees. Right? You might be right in the short term. Yes, you might have avoided a 30% drop in the stock over 2 days.
Yep.
But it doesn't matter if the company can deliver on their results longer term.
Right.
Now, you might say, well, CERN, you can't have successful quarters without having, you know, early quarters that are successful in moving the company up. Yes, but it's not smooth. There's bumps on the road.
Right.
Even for the best companies, there are big bumps on the road. And this is one example for Nvidia. I can share the same example for Amazon and Google and Apple and others.
Sure.
Okay. So it's kind of remarkable.
So, but how come they didn't call Ross Gerber? Shouldn't they?
He wasn't available that day.
He wasn't available. I see. Okay.
Yeah. Yeah. Here is the downdrafts again compared to Nvidia. They do share some downdrafts, but they also march to the beat of their own drum. And then here's how the worst 100 days compares to the S&P 500. Also, they share some rough days. Sometimes there are some market events that drive the whole market down. And Tesla is not immune to that. And typically would go down more because it's just the volatility in the stock is higher than the general market.
Right.
Okay. All right. If you had invested $100 during the IPO day, not been allocated IPO shares, but if you bought the stock on the IPO day, June 29th, 2010, that 100 would grow to 13,000.
It's a pretty good deal. I would take it.
Or if you put $1 million in, it would be $134 million. for those that like larger numbers. Okay, not a bad return.
Yeah.
Okay, by comparison, the S&P is a lot less than this. Sorry, I don't have the number, but it's a lot less than this because the S&P has not averaged 41% per year.
No.
Right, not even close. Now, for Nvidia, the same number is closer to $50,000. Right, that 61% return results in a lot more money.
Yeah,
because it's 61% per year.
Right.
Right. So the compounding takes effect. All right. I already messed up here because I was going to ask you this question, Randy. How many days of Tesla's best returns do you need to achieve that return? And I'll give you the answer because it's right on the screen. 35 days.
Uh-huh.
You only needed 35 days of the 3,568 days that the stock has traded to achieve all of the return that the stock has earned over this time period.
And all the rest.
It was the 35 best days.
Yeah.
Good luck picking them.
Right.
But it's 35 days of the best returns is all you needed.
Yeah.
It's crazy. It was a 14-year period. 35 days is all you needed.
Yeah.
Right. So if you're a really good day trader out there, then, no problem. Most of the time you could just be on vacation. Hoping you wouldn't miss one of these best 35 days. This to me was kind of astounding.
It is. It's crazy.
Yeah. Now it's also kind of meaningless because again, you can't ever time an investment to get the top 35 days of any company. It would be impossible.
Right.
Okay. And I also did the calculation that if you only invested in the top, only in the positive days for Tesla stock, you would not be a trillionaire. You would not be a quadrillionaire. You would not be a quintillionaire. You would be a sextillionaire. Right, which is impossible because you'd be worth more than the value of Tesla's stock.
Yeah.
So if you're too successful, you become too big for your own good, and you would be moving the stock every time you made a trade. Yeah. That one almost blew up the spreadsheet when I calculated those numbers.
Yeah, I've run into that problem.
Excel was not happy with me when I ran that.
Yeah.
All right, so here's that number for Nvidia, the almost $50,000. Investing 100 would be worth 50,000. Or investing $1 million would be worth 500 million almost.
Yeah.
Okay. All right. Volume. This is also kind of interesting. Tesla stock, you can see the volume, I'm looking at the dollar value of the volume, the average daily value that's traded.
Okay.
Not just the number of shares, but the daily trading value. And you can see as the stock has become a larger company, the daily trading value has increased.
Yeah. And
you can kind of see, a couple of stair steps here. But I think on average for Tesla, I think it's about $20 billion a day is traded, which is a lot.
Yeah, it's astronomical.
It's a lot of money traded. And I'm just trying to find my numbers here so that I can give you the correct data. And while I'm doing that, here's the same chart for Nvidia, and you can see that the trading value has increased as the stock value has gone up.
Sure.
Yeah, so here it is. Okay. So what's interesting, I'll just go back for Tesla. Since the IPO, any guess, Randy, on what the total value of all the Tesla stock that's traded is worth?
Total, huh? I don't
add up all the value of all the daily trades.
Yes.
For 3,568 days. What is the total value of Tesla stock that's changed hands?
Are we going to blow up we're going to blow up the spreadsheet again?
Well, it's big, but not that big.
Oh, I see. Okay. All right. 3 trillion.
30 trillion.
30 trillion. Okay. 30 trillion.
Which is, well, I'll show you the numbers here in a second. For Nvidia, the number is 20. Hang on. Sorry. Thought I had it at my fingertips.
Aha.
Sorry, no, we'll have to come back to that. It's a big number, but not as high as Tesla.
Okay.
Here is the trading volume, the value of the trades for Tesla versus Nvidia.
Hmm.
And Tesla was generally trading more value every day than Nvidia, but now that Nvidia is so much bigger as a company market cap,
Yeah.
Nvidia trades more value per day than Tesla does now
Got it.
generally.
Hmm.
It shouldn't be a big surprise.
No.
Okay, so here's my comparison here. The bottom half of the screen, Tesla's traded 30 trillion total since its IPO, and over the same time period, it's 19 trillion for Nvidia.
Hmm.
And if you do a ratio between that and the company's current market cap, Tesla has traded 45 times its current market value. And Nvidia has traded about 7.
Wow.
So over the time, there's been a lot more trading activity in Tesla, certainly than Nvidia over this time period.
Yeah.
Okay. Let's look at the top half of this chart. This one's kind of shocking to me, although I think the number is a little bit weird, and I'll share why in a second. But when you look at the number of shares traded every day for Tesla over the last year, it's been about 26 billion shares every day.
Hmm.
Okay. I'm sorry. The total volume it's traded is 26 billion. The average volume per day is 105 million shares.
Hmm.
Okay. The total shares outstanding is just over 3 billion. Therefore, the average holding period is 30 days for Tesla stock. On average,
Yeah. Yeah.
the average share is being held for 30 days. Now, this is skewed tremendously because there are a lot of people that are holding their stock and they've held it for a long time and will not trade it. But equally, too, there's another set of people, or hedge funds or day traders even, that trade multiple times a day.
Well, it's the number one. Is it still the number one options play?
It might be surpassed by Nvidia, but it's certainly up there.
Right.
Yeah. Right. So, it's pretty phenomenal how quickly the shares are trading hands.
Yeah.
And Nvidia, it's almost twice as long as Tesla.
Yeah.
So definitely there seems to be more, short-term trading activity for Tesla for whatever reason. Okay.
Well, again, I think day traders love volatility. I've loved volatility since I started trading. I started trading in my teens, and it was a company called Fairchild Camera and Instrument, and Fairchild Camera and Instrument was extremely volatile. And I think because I loved math and was interested in how math worked, I got very interested in that kind of a trade, and I made a lot of money on Fairchild, a lot of money for somebody that's in their late teens. But my whole life, I've really liked to pay attention to the volatile stocks, and I think that's day traders, are going to be drawn to that because you have a greater opportunity to make money
Yeah.
and
Yeah.
lose.
And let's not confuse that though with investing.
Yes, of course.
Because if you're holding something for 30 days, you're not really giving the company any time for anything to play out on a
Right.
fundamental level.
Exactly.
You're more playing the expectations game and whether or not you could sell it at a higher price to somebody, three minutes from now. That's a very different exercise than investing is.
Absolutely.
Right. I think people think of, when you buy a share of a stock, that's investing no matter what. Well, not really. There's very different strategies depending on how long you hold the stock.
Exactly.
And what you're looking at, what you're focused on over that time period. Now, with this data, we can actually make some adjustments to it. And when I do that, the first adjustment I can make is instead of using total shares outstanding, use what's called free float. There are certain shares that are restricted, so they're not trading on a regular basis. If we do that, we get down to 26 days instead of 30. And then further, if I take out just what the CEO holds, so backing out Elon's holdings and Jensen's holdings, we get down to 23 days for Tesla and 52 for Nvidia. So the average share for Tesla is held about 3 weeks.
Wow. The float.
Yeah, based on the free float. You could make further adjustments for other insiders and executives that are holding their shares. I didn't do that. But yeah. Anyway, Let's just call it between 23 and 30 days, depending on how you want to look at it. This is over the last year. Very short term. But there's a big distribution here. I think there's a lot of activity in the very short term, and then there's a lot of people that are holding their shares for, as you know, ever since they bought them, they haven't done anything with them. So that's making this average, look really short because of the activity from just these players that are trading a phenomenal amount of shares on a very short-term basis.
Right.
All right. Old mate engineer asked me this question. Hey, Cern Basher, what rate of return over time are these zones? Right. So as we pointed out, the stock delivers its return in a pretty condensed time period.
Yeah.
So of course I, recovered my spreadsheet after it calculated those big numbers. I gave it some rest and then I recovered it and I was able to determine that the first period, which I'm calling the first Tesla epoch, the stock made a new high in January of 2013. And it was at a split adjusted price of 253. And by the end of September that year, it rose to almost $13. So it was a 5x gain. So that was that first circle. It was a 5x. Okay. And I'm not measuring it from the bottom. I'm measuring it from when it hit a new high. Right. I'm waiting for the stock to hit a new high, basically, breaking out of this old pattern, hitting a new high. And then from there, it's 5x.
I got it.
Okay. If we measured it from a low, it'd be even more. The second epoch, same thing. I'm not measuring it from down here. I'm measuring it from when it hits a new high. So it's already moved up a lot. Now you could say, a bit of a head fake here. Like, I'm not suggesting this is any kind of trading strategy. I'm just showing you how I measure these numbers.
Right.
Okay. The second epoch, the stock bottomed in June of 2019 at a price of just under $12 a share. And it was down 54% from its high point at that time. And then by December, it rose to a new high of 26. And then by January of 2021, so it was, 14 months-ish, it rose to almost 300 a share, split adjusted. So measured from that December new high, that's an 11x gain in 13 months. 13, 14 months.
Right.
Yeah, 13 months. If we do measure it from that low, it's a 25x gain. So either way, a phenomenal gain.
Right.
And then I'm suggesting the third epoch, stay tuned.
I see, yes. Because we are now 50% down, similar to something you just talked about here in the second. And sitting on the potential for maybe the greatest gain yet.
That's right. That's right. Good things, this good things brewing.
Good things.
And I don't make predictions about future stock prices. But if we look again at the fundamentals of the company, stepping away from the stock price, fundamentally, the company is working on some very interesting projects that, as we have discussed here, have pretty incredible potential.
Very, very incredible.
Yeah. Now, before we end this one, I just want to apologize. On our previous show, we announced a new product, which was this Tesla van down here.
Right.
And I failed to give credit to Kristen, who generated this image. At the time, I couldn't remember who created it, and he reminded me that he did. And so I'm happy to give him credit for this. And I would also say that in addition to that, we're also announcing a couple more new products today, thanks to him. Here's some pretty cool looking vehicles.
Here you go.
Okay. And if you don't like that, then how about that one?
Yeah.
Although you may say that's pretty similar to what's out there now, but I thought this was pretty cool.
Yeah. Yeah. And these are Grok?
I don't know what his technique is. I'm guessing it might be Grok.
Okay. All right.
Yeah.
Well, we know there's some new cars in our future, so maybe the design center can take a look at those before they finalize.
Maybe it might be too late. Hopefully they don't delay 1010 just to add, these new design ideas.
So there was a few out over the week. I'm sure you saw them all. Do you like the idea of the I don't know, the forehand captain's chairs that can swivel so you can play bridge and or whatever your favorite card game is in the car? Or are you more inclined to go with the sit back with a two-seater and enjoy all the space?
Yeah, I think I'm of two minds of that, right? The first mind is from a user experience standpoint, that's pretty cool, though a lot of people don't like sitting backwards in a moving vehicle.
Right.
Although if you ride a train any period of time, you've experienced that and it's not a big deal. You get used to it.
Or a station wagon when you were growing up.
Yeah. But I guess from a safety standpoint is what I wonder about is what are the rules or requirements around that? You know, how safe would it be?
Yeah.
In a rear end collision, instead of your head going into the back of the seat, you're going to be going forward to the back of the vehicle.
Right.
So I don't know. I'd be interested to see sort of how that evolves, but that would be my concern about that. But yeah, I think that the vehicles are going to evolve to be very different inside. That's going to be the differentiator, is that experience inside the vehicle.
Sure.
Right. And I've suggested that Tesla's vehicles could become amazing gaming consoles, locations.
Right.
That people may actually take rides to experience the gaming experience inside the vehicle.
And see, we're on the same page, because the other day I suggested that they could have some very specific movies, a 15-minute, a 30-minute, maybe even an hour movie that would only be available in the cars with amazing sound. And of course, the amazing sound would also be true for the games. So
Yeah.
these are all kinds of the experiential things that might be in the future.
Maybe they can just do away with seats and have, you know, pressurized air that just levitates your body inside the vehicle. So if the vehicle is hit, then you're just floating in there, and I don't know. That probably wouldn't work. You might be more like a fly on the windscreen at that point.
Yes, well, I'm sure we're going to see some amazing things on 1010. All right, so we conclude the first part of this week's session, and Cern and I will be back, and either Friday or Saturday. I'm inclined to think it'll be Friday for those of you who are paying attention and want to hit the notify button so you make sure that you get all the possible Cern that there is to be had this week.
We have some great stuff in part 2, Randy.
I'm sure we do. I think you said something about more Tesla stuff.
A little.
A little.
But also we're going to talk about the potential for humanoid robots in terms of its multiplier on GDP.
Yes.
And I think there are leaders of about 200 and some countries around the world that would want to pay attention to this discussion.
Wow. Okay. And I can think of a couple of leaders right now who want to become a leader of the free world.
They should be paying attention too. I'm sure your viewership's going to go up after the show airs.
They really need to see this. Okay. And then also I would just want to mention some buddy of yours that lives down the street, Scott something, I forget, you know, he was on yesterday. And for those of you who missed that, we talked about the 1X humanoid robot. You definitely want to see this. This is very, very important in terms of the way things are developing in this whole humanoid space, because new actuators, a new concept, a new approach on the actuators. If you didn't see that yet, have you've seen Scott talking about the 1X?
I haven't seen that episode yet. It is bookmarked. I'm going to watch it because when Scott speaks about these things, it's very interesting.
Very, very. All right. So I'll put that card right there. And until next time, folks, it has been great talking to you.
Thanks, Randy.